Last year looking for $2,200 gold. I am still looking for $2,200 gold. A move past 2,100, and we're quickly getting ready to challenge that fact. Takes us really 22 to 25. Now, what's my time scale? I don't think it's going to go there overnight. I think that if we see 2,200 by Q2 next year, that will be amazing. But here's the thing, if you look at gold on a long-term chart, if you look at real estate on a long-term chart, if you look at silver on a long-term chart, there's been one predominant direction. And what is it? Up.
Yeah, up.
Because they're hard assets.
Precious metal is expected to update its historical peak, and the rate may exceed $2,300 in early 2024. The price will continue to rise from 2025 to 2030. In optimistic scenarios, the rate will go above $3,000. GaryWagner, renowned as the editor of thegoldforecast.com, is a seasoned expert in financial analysis. Wagner stays optimistic about gold hitting new highs, believing in an upward trajectory for gold and silver. Most expert analysts predict that the XAUUSD rate will rise. Gold prices hit a new record on Monday for a second day in a row, with spot prices touching $2,100 as the global rush for bullion appears set to continue. It is currently trading at $2,084.59. The silver coatee positioning is very bullish. That's why silver needs a slight decline in 10-year yields to start its journey to its first target of $34.70. Anticipating a continued preference for gold by central banks over fiat currencies, Wagner foresees ongoing appreciation for hard assets. According to a recent survey by the World Gold Council, 24% of all major banks intend to increase their gold reserves in the next 12 months as they increasingly grow pessimistic about the US dollar as a reserve asset. Meanwhile, GaryWagner also states that the Fed has halted rate hikes, expecting a path to 2% inflation benefiting gold. On Friday, while Fed Chairman Jerome Powell pushed back on expectations for aggressive interest rate cuts ahead, his remarks indicated the Fed may at least be done hiking for now. Gold prices climbed to an all-time high above the $2,100 psychological round mark during the early Asian session on Monday. The speculation that the Federal Reserve has reached its peak of the rate hike cycle boosts yellow metal demand. Now, we present the clips of GaryWagner's insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
This is myself. First, to answer the part about the Fed, they've already implemented a pause. They've already ended the rate hike cycle, unless data comes out that suggests they've gone off the trajectory that they're currently on, which they believe will take them to 2% inflation. So they're done raising rates. That's my opinion. It's not based on anything a Fed member says except veiled kind of comments, because they don't say much, and when they do, they talk out of both sides of their mouth. Where could gold go to? And this is my favorite subject. I might have been wrong last year looking for $2,200 gold. I am still looking for $2,200 gold. A move past 2,100, and we're quickly getting ready to challenge that fact. Takes us really 22 to 25. Now, what's my time scale? I don't think it's going to go there overnight. I think that if we see 2,200 by Q2 next year, that will be amazing. But here's the thing, if you look at gold on a long-term chart, if you look at real estate on a long-term chart, if you look at silver on a long-term chart, there's been one predominant direction. And what is it? Up.
Yeah, up.
Because they're hard assets.
Right.
And if you look at the buying power of the dollar or any foreign currency, there's been the same consistency and trajectory, but kind of the other way. That you buy less with those currencies. So the currencies are getting beaten up, and the hard assets are kind of filling that void, because for centuries, individuals, corporations, countries have felt comfortable having their assets with something like gold, a precious metal, or other things. Look at the World Council's report that said that, I think it was in the first 3 quarters of this year, central banks combined bought a record amount of gold, 800 tons, I believe. And that's huge. I mean, that's huge. So you've got central banks buying and at the same time running bond auctions, which is kind of how we print money inadvertently. So
Right.
what's happening? We're watering down our currency and we're replacing it with a hard asset. Do
When
you see a
when
routine there? Do you see?
right.
I see something there that's very easy that we all see. They know something that they can act on. We might know something and not have the ability to act in the way they can, but both assumptions are correct. Assets like gold and silver will continue to gain value over time. Fiat currency will do the opposite. The most recent levels I wanted to see if gold rose, how it would react, and now the future levels I'm looking at. One of the big ones was $1,980.
Hmm.
Then the key psychological $2,000 level. Above that, we've got a double top at, I believe, 2,040, then one at 2,080. And then for those old enough to remember Jackie Gleason, it's off to the moon because if it breaks above a certain point, there is no strong technical resistance in sight. In the same way, the recent move down in the dollar was chart damage because there's no technical support for about 2 to 3%.
GaryWagner predicts that the recent shift has contributed to the enduring value of assets like gold over time as fiat currencies face devaluation. One of the primary concerns associated with fiat currency is its susceptibility to devaluation. Historically, unchecked printing of money or excessive debt can lead to inflation, eroding the value of currency and diminishing purchasing power. While anticipates a persistent challenge, he asserts that even if inflation aligns with Fed standards, everyday item prices may not see a decrease. The release also showed that headline inflation was flat on the month and at a 3% rate for the 12 months. Goods prices saw a 0.3% decrease, while services rose 0.2%. On the services side, the biggest gainers were international travel, healthcare and food services, and accommodations. Let's get back to the interview.
Well, we've got kind of a trifecta, let's call it that, in which there are multiple events and scenarios kind of taking place simultaneously. The big news, of course, is the Fed. First, they paused, but they wouldn't allude to cutting rates till way in the future. What was their slogan? Higher for longer. The hawks came out and said, but we need more rate hikes. I'm not sure this will do it. And the other day, one of the most hawkish of the governors, Christopher Waller, came out, said, I think we're going the right way. I think we've raised rates substantially. And we should start thinking about cutting rates. And that's kind of like me saying, no, I'm going to be on a diet every day. It's just counterintuitive to what that guy normally says. And so that really ignited the second leg of this rally. Of course, we have the October rally in both gold and silver. That takes us up to a certain price point in each. We have a sizable correction, and now we're back in rally mode up until today. But I think that even if we get any kind of selling, it'll be very, very shallow, short-lived, and we'll return to higher prices in both metals. I believe it was right around 100. Realize that gold for centuries was $20 until 1933. Roosevelt did whatever the name of the act is. He told every American citizen that they
turn in their gold,
turn in their gold, turn in their silver, and we're going to replace it with this beautiful bill that says, trust us, trust us. That was the beginning of fiat currency. Nixon put the final stake in that, and that's after Bretton Woods. And in fact, what he did is really up until Nixon's action, if you had a silver certificate, a piece of currency, a gold certificate, you could still go to a central bank anywhere in the United States and exchange it for gold. He made that illegal, except the only ones that could convert gold into dollars was countries that the USA approved of. If you look at what's happening to the dollar, to the economy, to different governments, they're all shifting from extremely restrictive because they're coming from not even extremely accommodative. What do you call when your borrowing rate is between 0.25% as it was in March of 2022? And then there's the thing about negative rates in Japan, which is a concept For the life of me, I still don't understand. So you're going to pay me for borrowing money. But it goes to show you, I have no clue what they're actually trying to say. But the fact is, it's harder to buy mortgages. And the one thing about inflation has run from 9.1 down to about 3.7. That's a big move down. But I think the unspoken truth about inflation is when it normalizes, let's say it goes back to 2% tomorrow morning magically, are prices at the store going to decline? They don't. All bringing inflation down means is they won't get more expensive, but they're already so expensive that that's going to be the challenge, is not that they slow inflation down. It's the fact that once inflation is brought to what the Fed considers to be a tolerable level, the items that people use to live and breathe every day remain just as elevated. They're not going to go down.
Gold gains momentum as markets continue to price in a potential interest rate cut as early as March. According to the CME FedWatch tool, markets are now pricing in more than 50% odds of a rate cut in the first quarter of 2024. Gold price rebounded strongly in 2023, refreshing its all-time highs. However, the prices of precious metals had a significant correction from May to September. This downtrend is now over as the dollar strength index has flipped bearish. How do you envision the evolving role of gold and silver in the face of uncertainties surrounding fiat currencies? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.